Hello and welcome once again to National Investing Day. Our webcast title for this session is Creating an Income Stream with Dividend Kings. My name is Ben Watson. I'm an education coach here at Charles Schwab, and I am joined today by my friend Adam Lynch, who's the Director of Equity Research. We're going to meet Adam here in just a moment as we get started, but our discussion today is going to be around the topic of the idea of creating an income stream. How do we use the tools that we've got available at the Thinkorswim platform and at Schwab.com to be able to create an ongoing income stream using Dividend King stocks specifically? We'll talk about what those are and how we might go about this process as we get into the discussion today. But a couple of quick housekeeping items before we get started here this morning. Remember that everything we talk about is simply for illustrative and educational purposes only. It is not a recommendation of any particular account type or security or strategy or anything else. Now, we're going to use some technical analysis. We're going to use some fundamental analysis in this discussion. Those are all theoretical in nature. None of those are guarantees as to what's going to happen out there in the real world or out in the future. And as such, Schwab doesn't recommend the use of technical analysis or really any one single method of investment research as the sole means of doing investment research. We're going to be using the Thinkorswim desktop software platform today. It is a great research tool. It is a great practice tool. It, however, does not do certain things that a live trading environment will do. So as you move your practice from paper trading to live trading, make sure that you're aware of those differences. Also, a couple of things to keep in mind, specifically when we talk about dividends and dividend yielding stocks. One of those is the fact that dividends are not guaranteed. Dividends can and do and may change over time. They may be cut, they may be stopped entirely. So that's something that dividend investors may need to pay attention to. Also, remember that investing involves risk, including the loss of principal, past performance, no guarantee of future results, and diversification, asset allocation, rebalancing strategies. Dividend strategies do not ensure a profit, and they don't necessarily protect against losses in changing or declining markets. So those are things that we need to pay attention to as we get into this discussion. So just a quick background. I've been an education coach here at Charles Schwab since 2005. I'm the host of Your First Trade on the Schwab Network. Schwab Network brought to you by our media affiliate, Charles Schwab Media Productions. And I also teach not only webcasts, but also am an instructor in our live in-person education, trading and education events. So you may see me around the country in various places, and some of you have very likely been to some of those events around various locations. So now let me introduce you to Adam Lynch, who's the Director of Equity Research at the Schwab Center for Financial Research. He's been there since 2015. He appears on Crypto Corner on the Schwab Network, and he specializes in Schwab Equity Ratings, Schwab Equity Ratings International, and Schwab Sector Views. And you're going to see him all over the place, not only on the network, but elsewhere. Welcome, Adam. Thanks for being here today.
Yeah, hi, Ben. Thanks for having me. Excited to talk about the Dividend Kings.
For sure. And this is a topic I know that you and I have had a couple of conversations about. I know that you've talked about this in previous education days, a different iteration of what we're doing today with National Investor Day. But this is a topic as we get started into this discussion of dividend investing. I had a good friend of mine say that, you know, the larger the capital that you have, the more that this idea becomes important because now you have something to work with. But that doesn't necessarily mean that dividend investing is something that's only for later stage or larger accounts. So we're going to talk a little bit about that. We're going to talk about the role of dividend stocks in a long-term investing plan, talking about building an income stream, if you will, and the various ways to do that. We'll talk a little bit about the tools that we've got available to us here at Schwab, both on Schwab.com and at on the Thinkorswim desktop software platform. So Adam, let me ask this question to get into this discussion first of all. And this is a question because we've received some of your questions that you've chatted in and that you've sent to us previously. I want to just ask this basic establishing question. What are dividends and how do they work? It seems simple, but let's start there.
Yeah, it's a great question. So when we're taking a look at how a stock performs, we've got total return, and a portion of that is the price, and that's going up or going down. And then another portion of it is the dividend, whether or not the company pays one. So that dividend is basically a cash payment that is paid typically on a quarterly basis, although they can be paid monthly or annually. But they typically are paid on a quarterly basis. It's a portion of the company's profits that they're paying to their shareholders. And it's a really nice way to kind of continue to compound, build that portfolio, increase the size of it throughout time.
So let me ask a follow-up question to that, Adam. I mean, we know that not all companies, not all stocks pay dividends, correct?
Correct.
And so there are some characteristics of companies that typically do tend to pay dividends. They tend not to be necessarily aggressive growth stocks where the
Mhm.
company is plowing that dividend or that capital back into company growth. They tend to be more mature companies, don't they?
They do. Yeah, I would say they tend to be more, more mature, more value than growth.
Okay.
Oftentimes, they may be located in particular sectors or industries. We don't see tech companies paying as high a dividends as maybe a consumer staple. So those are always some things to consider. But yeah, you can find all sorts of companies that will pay dividends. Doesn't have to be your slow, stable type of a company. And like you mentioned, this isn't necessarily a strategy for just an older individual that's trying to, replace a paycheck in retirement. That's not the only
So
reason that one would hold dividend paying stocks.
So this could be something that somebody building a portfolio could
Mhm.
use, for instance, to bring in income to buy more shares of stock or to perhaps reinvest in the positions that they've already established, right?
Exactly. It's one of the nice things about being able to sort of compound that growth is if you're getting that regular income and like you said, reinvesting it either in the same stock
Mhm.
or, in others, you're going to just continue to compound that capital over and over again. And that's where we can really see some nice growth over time.
Sure. Okay. So we're going to get back to some of those questions about specific accounts and how we might grow that. One of the questions that oftentimes comes up is, how much capital do you need to have to build an income stream? But since the title of this particular segment is building an income stream with Dividend Kings, I thought maybe we would talk a little bit about that and set that foundation for just a minute. I know that name sounds kind of you might think about it. Adam Lynch and the Dividend Kings now appearing at the Rainbow Room, right? But
Right. Yeah.
let's talk a little bit about what these quote unquote Dividend Kings stocks are. What's the qualification for a company to be called a dividend king, if you will?
Yeah, what it is essentially a company that has increased their dividend over the last 50 years. So these are long-term companies that have been around for a while and that have established this essential pattern, if you will, of continuing to increase that dividend every year.
So if that's really the only characteristic, I mean that leads to the idea that maybe there might be a variety of, like you said, different types of stocks within
Mhm.
that Dividend Kings name. So I'm here on the Thinkorswim platform. That's what I'm sharing on the screen right now. And I'm looking at a pre-built publicly available watch list that's available on thinkorswim.com. And it's called the 50 plus year dividend. So if that's the qualification for a dividend king, now we get a visualization. So I'm on the Market Watch tab on the Visualize sub tab, and we're looking at I think, 51 plus stocks that fall within this particular characteristic, the minimum of 50 straight years of dividend hikes. So right there, that already qualifies these companies as having been around for at least half a century, right?
Exactly. Yeah. So we know they've got well-established business models. You can see obviously a lot of the tickers here, names of companies that we're familiar with: Coca-Cola, Walmart, Johnson and Johnson. Steady companies that have those great models that are able to continue to deliver this dividend because that's not an easy thing to do. These companies have to be continuing to grow. They have to be profitable. They have to have these strong capabilities to do this and to continue to do it every year.
So one of the things that I happen to notice here in this particular list is that you're right. There are some sectors of the market, sectors of the S&P 500 that are common elements. We see a lot of those occurring within those consumer staples, the defensive names, if you will. You see some industrials in here, healthcare, even a little bit of consumer discretionary, which it seems to be a little bit more volatile. What I see is notably lacking from this list of sectors in this Dividend Kings group are those high flyers, the growth names, the information technology, communication services, energy, for instance, as we've seen energy be very volatile in the last
Hmm.
little while here. You know, one of the characteristics, as you said, is companies that have a kind of an established business model that aren't necessarily in that growth mode. But does that mean that the companies that are in this Dividend Kings group aren't necessarily seeing capital appreciation? Because that's one of the risks, isn't it?
Yeah, it could be. I think there, if we look at this list particularly, we definitely see some stocks that have had quite a bit of capital appreciation.
Mhm.
Um, but I do think that a lot of times people may be targeting these sort of positions and these types of stocks for that dividend yield, for that income. So that's another thing to always kind of keep in mind is the characteristics of these companies and why others, might be wanting to invest in them.
Sure. Okay. So now that we've got this list, and I just want to really quickly mention that we've also got a list of the 25 plus year dividends, which we sometimes refer to as the dividend aristocrats. These are those companies that have established a 25-year track record, but they may also be some of those technology stocks. So, Dividend King's not the only place to find dividend income. And those that are falling in this Dividend Kings space, maybe those that help traders and investors to avoid some of those yield traps. So talk a little bit about this. I want to switch back to our slides for just a minute, but talk a little bit about some of the risks to investing in dividend stocks.
Yeah, the yield trap is, I think, one of the main things, and you mentioned that right off the bat there, and that is essentially just trying to find the highest yielding stocks, right? And believe it or not, we do see people do this from time to time. They may just go into the Schwab stock screener, sort on yield, and try to find the biggest one. And oftentimes, if a company has a dividend yield that's above, say, 5 or 6%, they may struggle to continue to pay that dividend. And that's where you get into the situation where the company may have to make a dividend cut. And oftentimes, if that happens, the company gets penalized pretty harshly. You mentioned the energy sector, and I think that's a very interesting one because we often see pretty healthy dividends that are paid there, but it has these sorts of shocks and this type of volatility that can creep up every few years that will just cause those companies to have to completely cut their dividend. So you may not get that consistency in there. And then another thing, when you're investing in dividend paying stocks, you're going to need to make sure that you're still well diversified because, again, they could kind of cluster in particular sectors. So always keep that in mind. And another thing to keep in mind is that this is a portion of the portfolio, right? We may also want to enhance it with some other growth stocks and other types of investments. So make sure that you're not missing other opportunities that are out there by just having a laser-like focus, if you will, on only dividend-paying stocks.
Sure. Okay. So, Adam, before we get into the process really of kind of building that income stream, and while we're kind of here on this topic of some of the risks that impact dividend stocks and really the market as a whole, one of the things that we've just come off of this week, and I think it's very timely that this conversation is happening 2 days after an FOMC meeting where interest rates were held stable at the moment, but there's still some volatility out there in the market. One of the risks to dividend paying stocks is the impact of interest rates, right?
Yeah, interest rates, inflation, two key metrics that we need to consider here. Because obviously, if you can make, say, 5% interest with the 10-year or some other sort of fixed income, well, then what's the point of investing in a dividend for 3%? Well, there is a point, right? Because you've got the additional capital appreciation that you can experience there. But yeah, it's an interesting thing to keep in mind. I see we've got the debt to capital, right? That's always an
Mhm.
important metric to pay attention to. Another one that we haven't talked about too much yet, but is the payout ratio, right? We want to make sure that these companies have the appropriate amount of money to be able to pay those dividends, and keeping in mind, whether or not they're dealing with high rates, they're dealing with low rates, is going to have an impact on that business and whether or not they're able to keep doing this.
Cool. Okay. So, Adam, now let's kind of shift to the idea of the process, if you will, of building an income stream. So, when we talk about an income stream and we talk about what it is that that process entails, one of the questions ought to be asked at the beginning is, what is the goal of a portfolio in generating that or utilizing dividend income to create that income stream? Why are we even doing this to begin with?
That's a great question. So, first of all, what we want to do here is, like you said, try and establish that steady income stream. So, this could be like we've mentioned, for a retiree who's trying to replace that paycheck, or it could be just a great strategy to kind of continue to compound that growth. So, what we're doing is trying to come up with the way that we would build that, what we need to consider, the types of stocks that we're going to be looking for, and then we want to make sure that that income stream that we're setting up is consistent. And I'm sure we'll talk about that eventually, but
Right.
these companies don't report on the exact same sort of cadence, right? So some companies may be reporting. Well, take this week we had all the big tech companies report. Some of those were Q1, some of them were Q3. So you got to make sure that you kind of structure that so that you're getting that consistent dividend, not just once every quarter, if you will.
Okay. All right. So let's think about this now in terms of establishing this predictable income, and let's ask the question. Now, I will just say this in preface to your answers here. We know that we've got a lot of people that are watching this particular webcast. We know that we've had a lot of questions that were pre-submitted. Many of those questions were about specific portfolio circumstances specific to an individual's portfolio. So obviously we can't answer every single one of those questions about somebody's portfolio and how much an individual needs to have in a portfolio to establish a process like this. So we're going to talk in some generalities, but I wanted to
Mhm.
just at the beginning give you some resources. Again, this is a great opportunity to have a conversation with, say, for instance, our financial consultants in the Schwab branch network, where they can sit down with you individually and look at your portfolio and help you to determine what you want to do and some goals that you might want to achieve. But I'm going to ask the basic question, Adam. How much does an investor need in a portfolio to really start to establish income from dividends?
Mhm.
And what's a reasonable return to expect?
Great question. So I think one of the key things that you need to consider here is what that income goal is. And a lot of times, what we try to do is define that in a monthly manner and then extrapolate that out to a year. So let's say we wanted to make $1,000 per month or $12,000 a year. What we are going to do is try and assume a dividend yield. Now, the dividend yield that we may assume could be 2%, it could be 4%. The long-term dividend yield on the S&P 500 is down around 1.25%. But let's just take 4% as an example. What we would do is we would take the 12%, or the $12,000 that we're trying to make on an annual basis, divide that by our 4%, and that gives us $300,000. So we would need a $300,000 portfolio if we wanted to try and generate that $12,000 a year based on our 4% assumption. If you started smaller, with a $100,000 account, then you'd be expecting $333 or so a month. So you try to set that up by figuring out what sort of income you're trying to generate, and then kind of back out the value that you would need to have that account be in order to be generating that income.
And I think it's worth making the statement that, even a new investor or somebody that's trying to catch up, you've
Hmm.
got to start someplace.
Exactly.
So rather than waiting until you have a portfolio that's 300 or $500,000 or more to establish this process and establish this income stream, it perhaps could be something that even with a new investor, and I know this is one of the things that we talk about with our new investor accounts and the webcast series that we have going on with those new investor account types that could be established right off the bat to start compounding that income stream, right?
Certainly. Yeah, I think that's a great point, Ben, is it's not necessarily, yeah, you have to have some huge account that you're trying to grow. A new investor getting started, targeting companies like these, again, well-established companies that have been around for a while that are going to continue to pay that yield, hopefully, as well as have the opportunity for the price appreciation. I mean, that's a great way to get started. I don't know, I'm trying to think of a better way, right? It's better than say buying one stock, loading up on just a single name or something like that, right? If you're trying to catch up, you don't want to try and get too aggressive and
Sure.
kind of get yourself into a ditch, if you will. So this, I think, is a nice way to try and catch up while having the opportunity for the potential upside of the price appreciation, but getting that compounding started. I think just a key thing. The compounding of interest is a fascinating topic. I believe it was the only thing that kind of confused or surprised Einstein was the power of compounding interest. So it is something that is very important to consider when we're doing investing, and an easy way to get it done is through a process like this.
Absolutely. Well, let's do this. Let's go back to the Thinkorswim platform and let's take a look. I think probably better to have an example that we can talk through. And just as I've been scanning through here, the one that kind of stands out to me on a performance basis and on a kind of a consistency basis is Coca-Cola. Just from the knowledge that most people have about the company, it's part of our lives, right? Part of the American culture and elsewhere, and it's one of those companies that has had a pretty good track record, at least 50 plus years of growing that dividend. And if we take a look at it on a chart, we were to take a look at Coca-Cola on the chart here, we can see that over the course of the last year, they've generally been moving a little bit higher. If we were to go out to a longer term chart, if we were to go out, say, for instance, to a 3-year weekly chart, you can see that the price of the stock is growing as well. So that's an important consideration, is having a company that perhaps is not declining in value so much that you're losing the gain that you're making from bringing in the income from the dividends, right?
Exactly. Yeah. If your company that you're holding is yielding you 4%, but it's going down 5% per year, well, probably not the best investment. So you want to find those companies that have a long-term track record, that are going to be able to continue to generate that profit, to be reinvesting it into the business, paying out these dividends. So it is something to keep in mind, a consideration. I always encourage everybody to know the company, right, and get a feel
Sure.
for what it's doing. Obviously, we wouldn't just buy it because it's a dividend paying stock. We'd want to take a look at the price chart, read some news about the company, get a feel for really what's going on. But yeah, you definitely want to find stuff that is continuing to grow so that it can continue to support those increases in dividends that the company's trying to have.
Okay, so we're here on the Thinkorswim desktop software platform, specifically the paper money version. So I just wanted to show here on this trading platform, for those that might be more trading inclined, where they might find some of that dividend information. And then we're going to switch over to Schwab.com and dig a little bit deeper into some of those fundamentals, something that you do on a regular basis over there at the Schwab Center for Financial Research. So I'm going to go to the Trade tab up here at the top of the Thinkorswim platform, and we're going to go to Coca-Cola. And you can see other information that we've got about the stock itself, current trading price, those types of things. But right here under this, the underlying information in the Trade tab, if you open up the down arrow here and kind of extend that information, you've got some relevant pieces of data here. You've got the dividend yield, you've got the absolute amount of the dividend, and you've got the dividend frequency. And you've got the last dividend or ex-dividend date. So you see kind of the frequency at which they pay. I know you mentioned before that some stocks pay on a monthly basis, some stocks pay on a quarterly basis, some stocks pay biannually. So that gives us an idea just right off the bat of kind of that absolute value of those dividends that we're seeing right here on the chart. So Coca-Cola right now paying 2.71%. We can see what that dividend amount is, and we can see the dividend frequency and when it's coming. And if we go back to the chart, we're also going to see that information historically with those icons on the chart so that you can see right off the bat, if you're pulling up a chart of a stock, whether or not they pay dividends and just when that frequency is. But that becomes a little bit difficult to manage if you've got now multiple stocks in your portfolio that you're starting to look at for that dividend information. So we've got some additional resources here. Adam, I'm going to pop over to the Thinker to Schwab.com,
Mhm.
and I'm in a and again demonstration account here. But if we were to take a look at the balances in this or the positions in this particular account, one of the positions in this particular demonstration account is a position in Coca-Cola. Just about one share, just as a demonstration here. So we'll take a look at that as a function of that investment income. But before we get to that, I think, we take a look at this, and this is an idea of where you can see some of that information, because you'll see dividend information here on your position page in the Schwab.com website, and you can see, what that dividend number is, what the dividend percentage is, and what that payout is, and you can actually customize those columns to show more or less of that dividend information right here on Schwab.com, right?
Yeah, this is a fantastic tool to be able to monitor this stuff and kind of get a handle of multiple stocks, right? So if we had a list of 20 names here, we'd be able to really see when those dividends were coming in and kind of be able to organize and try and structure that stream.
Cool. All right, so let's do this. Up here at the top of the page, let's pop into the research tab. And in that research tab, we're going to come down here to stocks, and we'll talk a little bit about those characteristics of a stock like Coca-Cola, since we're using this as our example. And you and I talked a little bit about this yesterday as we were preparing for this. We're going to pop over here to the dividends sub tab. And now that's going to give us some relevant information about dividends as it applies to Coca-Cola, which is one of the dividend kings. So this is maybe the process that an investor would go through in determining, is this something that they want to put into a portfolio to help to build that income stream, right?
Exactly. Yeah, and we've got screening tools to be able to help people try and find target companies like Coca-Cola here. And then with this dividend module, we have just all sorts of information here. So you can see all of the historical dividends, all of the upcoming information, your rates, the payout ratio. Again, another really important thing to keep in mind. We like to see payout ratios lower than 80%. So this one coming in at 49 or 50 seems great, because these companies, we want to see them having a nice, achievable low payout ratio, high return on equity, good profitability statistics. And here you can get a good feel for a lot of that dividend information. So
One of the things that I like about this particular tool is that it also gives you a comparison between other stocks within that same industry. So you can see relatively where this dividend yield falls against some of their competitors,
mhm.
because that's a good source of ideas for how you might build a portfolio. It also gives you an opportunity to say, well, if I'm seeking yield in a particular location, am I at the top end of that range where it might be yield trap? Am I at the bottom end of the range where there might be better candidates? So for instance, we take a look at, the eternal debate between Coca-Cola and Pepsi, which is one that rages daily in my household. But you might see that Pepsi pays a little bit higher dividend, but they might have other characteristics that may take them out of that list relative to Coca-Cola, right?
Yeah, and I think this is a great point to bring up here, Ben, is the sort of comparison, because again, we wouldn't want somebody to see that 6.5% yield for FMX there, and just because of that, just hop right in and buy it, right? We want to make sure, again, that there are these other considerations. So I mentioned the profitability statistics. Those are always some
Mhm.
important things to keep in mind. If you had a personal preference here between Pepsi or Coke, maybe that could be the deciding factor. But you would want to kind of take a look at a few things other than just, hey, yeah, I'm going to do Pepsi instead because it's got a higher yield. Well, let's take a little bit of a, kind of pump the brakes a bit before we really just dive right into it. Maybe if we pull up Pepsi, its payout ratio is 90%. Well, then we would probably lean, back closer to Coke. So those are some of the things that we want to keep in mind. And there you go. Look at that.
Yep.
So of those two, yeah, at this point, I would probably lean a little bit more towards Coke because I think that yield is probably more steady. I count on it a little bit more just because of that higher payout ratio there from Pepsi.
Okay. All right. So that gives us some idea. Now, are there some other fundamental aspects of a company? We'll pop back over here to Coca-Cola, and I'm just clicking on that symbol. Are there some other fundamental aspects that maybe an investor wants to pay attention to besides those dividend statistics that are an indication of the likelihood? Now, look, this has been a company that's increased their dividends over the course of 50 years. The probability of them cutting their dividend at this point is relatively low, but it's not zero. And so, are there any factors that investors may want to pay attention to as they start to select stocks to put into this income stream that may be an indication of the likelihood that the dividend is going to change or cut or be reduced?
Yeah, there's definitely a couple of things. The payout ratio is number one. So I
Okay.
think that's the thing that we've taken the closest look at. We've run a handful of studies. My day job here is to kind of work on the models that we have that rate these stocks, and a lot of the things that we look at are different fundamental factors, and payout ratio, dividend yield, always an important thing for us to look at. One of the things that I think is important to pay attention to is the forward potential dividend growth. So there are estimates for future dividends for these companies. So you can always find that information. Another thing to keep in mind is earnings. So we want to make sure that these companies have strong earnings, right? They need to have this cash to pay the dividend from somewhere. So would always encourage people to take a look at the earnings tab, make sure that we've got, steady, consistent earnings there. You can see we've got some earnings growth predicted.
Mhm.
So these are the types of things that we want to make sure the company's in a good, healthy spot. Again, when we're looking at the dividend kings, we're probably not going to fall into that many traps. But if you're looking for maybe a younger company, right? Maybe it's only
Mhm.
been around for 5 years. Maybe you want to take a look at Nvidia, or something that's paying a little bit of a yield. Well, I'd encourage you to come here to make sure that it's a healthy type of company that can continue to deliver that. And there's things like earnings, cash flow growth. Again, some of those profitability metrics like your return on equity, return on assets, return on invested capital. Those are all important things that we want to see positive for companies that we're going to be investing in for that dividend stream.
Cool. Okay, so let's do this. Let's pop over here to our slide deck for just a second, and I want to pop forward a couple of stocks or a couple of slides here to this one that talks about this idea of a dividend ladder, and that's kind of the terminology that we use to describe this structuring approach, kind of layered approach to having dividend income. So once we've identified a stock like Coca-Cola or some other stocks within that list, and we've now perhaps made that decision, now one of the considerations is how does that fit into an ongoing income stream? Because it's likely that especially as we get into a longer dated portfolio, meaning somebody that's been around for a while and they've started to build a position, that you're going to have income coming in at particular times of the year and not so much at others, right?
Exactly. Yeah, and you've got a couple of companies pulled up there that we can take a look at. You see, they pay these dividends on a different frequency at different points in the year, and that's generally just because of the company's reporting cycle. So you want to make sure that we've got, in this case, we're trying to, it looks like target, $50 or so per month. Well, we'd want to make sure that we're not just getting, say, 150 in March, 150 in June. We want to have it be steady and consistent. And in order to do that, we need to look and see the frequency and the timing of each of the companies and their individual dividend. So we've got some great
So,
tools online to be
yep.
able to do that and kind of look at and analyze that stuff.
So let me ask you this question. And again, what we talk about the idea, and we made mention of this at the top of the discussion of building this income stream so that it is durable across different market cycles. And, we know that, obviously we have more volatile markets and less volatile markets. Is that one of the primary reasons for having this kind of established cycle of payouts? Because then we've got payments that are coming in at any particular time, and that helps to offset maybe interest rate changes, for instance. Are
Exactly.
there other reasons for this?
Yeah, I mean, I think you want to have this consistent payout that you can, count on, that you can consider will be there. You definitely want to keep in mind that, yeah, we're going to have a lot of fluctuations. So at some points, you're going to be getting this $50 when things are going great. At other points, it's going to be when it's not going so well. So
Sure.
keeping in mind that consistency, that's sort of like diversifying across time almost, right? We want to kind of always make sure that we have these opportunities and that we're able to kind of capitalize on them whenever they come up. And I think, setting it up like this so that we've got that steady stream that, again, we can see coming, we can kind of count on it, we'll know that it'll be there for us in good times and bad, is a nice way to be able to get started to kind of continue investing.
So I'm going to pop back over to schwab.com. And I know you mentioned that, we've got some tools to be able to do that. So I'm going to come
Hmm.
back to our demonstration account here. Again, quick reminder, again, this is paper money. This is a demonstration account. These symbols are not recommendations. These are simply illustrative examples. And I'm going to go back to our accounts tab, and I'm going to go to our positions page right here so that we see what positions that we have in the portfolio, in this demonstration portfolio. And then I'm going to select this tool right here, the investment income tool. And I think you'll see some of the similarities to that slide that we were just looking at as we jump in here. So this is looking at all of the positions in this portfolio that generate dividends and showing both historical and then also, depending on what we select, what the plan is going forward, including what that dividend stream looks like. So first thing I'm going to do, Adam, is I'm going to go back to 2025. So the time that we've got kind of a full year worth of history here in this portfolio. So talk to us a little bit about this tool.
Yeah, so this is a phenomenal tool to be able to see visually where these payments are coming in and how much they are. So we're looking right now, obviously back in time. You can see, well, it looks like this company's paying here. Yep, they paid in March, a couple months later in July, October. Big payment there in the last month. That might be something that we'd look into. But yeah, this is a great way to see historically how you've been paid. And then again, when we want to try to look out into the future, if we go to that next 12 months, we would take a look at this and say, okay, well, we got to find some companies that are paying, in August, that are paying in November, in order to kind of set up that steady stream. Right now, it looks like we're just getting big pops at the end of the year. Well, we want to have something that's a little bit slower and steady. And while you're able to see that information in here, you can see the expected dividends and the historical. So it's a phenomenal tool to be able to analyze your income streams, where they're coming from and when they're coming.
So this might be the location where, once you've started to build that portfolio and you come back here and you say, okay, you can start to see where some of those gaps are. As you suggested, we've got some monthly gaps in there where we're
Mhm.
not receiving a payout at all. And then we've got that big lump sum coming in December, which might create some challenges from a tax standpoint, from an asset allocation standpoint. Now, talk to me also, Adam, a little bit about the idea of using this tool as a check on rebalancing your portfolio. Because as you start to think about that kind of dual mandate that we talked about at the beginning, having a company that is appreciating or growing its stock price enough that you're not cannibalizing your dividend income, and at the same time providing enough dividend income that it makes sense to have in your portfolio. As you start to rebalance that portfolio, as markets change, is this someplace that an investor could come and just double check and see what that impact might be of taking a position out of a portfolio?
Certainly. Yeah, it'd be a great spot to, yeah, if you're going through your annual rebalance, let's say, and you get those trades in, and then you can come in here, double check, make sure that, nothing that you did threw off the income stream that you had tried to establish in the past. So great secondary check for things like that.
Cool. All right. So now what I want to do, because we are kind of running into our time cues here, but I know that we've got this, we've kind of weaved some of the questions through the process here. I want to address some of the specific questions that have come in and talk about some of the resources. And one of the questions, one of the common questions that comes up is there a relationship between historical dividends and their impact on future, say, for instance, earnings or growth of the company?
Certainly. Yeah. Anytime that the company is going to be paying dividends, it's got less money to do other things.
Mm-hmm.
So that's a key thing to keep in mind. But yeah, it's definitely something that we need to consider. When we take a look at these stocks, they've got to have solid opportunities here to continue to grow these. We've done a lot of research on dividend paying stocks, whether or not they're able to continue to pay them. Some of our research has shown that large cap dividend payers that are paying above 4% are essentially twice as likely to cut the dividend than those that have a lower yield of around two or three. So just always keep in mind that that's sort of a thing too, because we don't want to get caught off guard here with somebody that is going to cut or not continue to pay.
All right, so let's go to the next question here, Adam, which is, does an investor reinvest those dividends, or do they pull them out to use for daily operation?
I mean, that's going to be up to each individual investor, I would say. But in most cases, and especially for that younger account that's getting started, I think reinvesting that dividend is the way to go. Whether or
Okay.
not you reinvest it in the same company, but yeah, keeping that invested so that you're getting to take advantage of that compounding is, I think, a key piece of this.
And I think one of the things that this slide illustrates, hopefully, is the idea that dividend reinvestment is maybe something that, if that capital is needed for other purposes, let's say emergency expenses or something like that, a dividend reinvestment idea could be suspended for a while.
Mhm.
And it's also important, I think, to remember that dividend reinvestment isn't necessarily automatically available on all stocks. It may be something that has to be done either manually, putting that money back in, or taken out manually to put into another account, right?
Yeah, it's a great point. You'll see, in that accounts view, you'll have an option, reinvest dividends for
Mhm.
some stocks, but yeah, not for all of them. So that is a key thing to keep in mind. If you're seeing that dividend, that income continue to grow in your account and the cash balance, then yeah, at some point you may need to, okay, what am I going to reinvest this in, and take a look.
So the last question I'm going to ask, and I'm going to preface this last question by saying this. Once again, if you've got specific questions about your particular portfolio or your particular account, great opportunity. And this includes tax questions, because neither I nor Adam are tax advisors. We don't even play them on TV. But get in touch with your financial consultants at the branch level. We've got a branch network nationwide where you can walk in or call and have a conversation with a financial consultant. They can put you in touch with the resources that you need to be able to answer these questions. But the question is simply this, Adam: as you approach retirement, how much of a portfolio might be put into this dividend income stream?
Great question. And I think that's where we start at setting your goal. right? What is your goal for that monthly income? And then going from there, because I think that's really the way to get started here and to figure out how much. It's just to determine how much you want. If you're, again, especially in this retirement example, you're looking to replace a paycheck maybe. Well, you're going to need to figure out what your budget is and come up with, just starting from there. And then, okay, what do we need to pay for it? And then what do we need to set up in order to be able to grow with these dividend paying stocks to accomplish that goal?
Sure. And I love that. And Adam, very much I appreciate your conversation and your wisdom about this. Do me a favor really quick. We've got a feedback survey up there on the screen. So I'm going to ask all of our attendees to just quickly hit that feedback survey and the or the URL that we've got there. We've got some additional resources in our webcasts. Every Thursday afternoon, we teach an investing in dividend stocks webcast on our Schwab Coaching webcasts. And we've got lots of resources there and recorded versions. But what are some of the other resources that you specifically provide, Adam, over there at the Schwab Center for Financial Resources?
Yeah, so within the Schwab Center for Financial Research, we've got models that rank our stocks. So if you see the Schwab Equity Rating, the Schwab Equity Rating International, those are our quantitative models that are essentially determining whether or not these stocks are recommendable or not by our financial advisors. So I would always encourage people to take a look at that. Hey, if you want to get started with dividend paying stocks, a great place to start is screen on A or B rated SCR stocks, our top 30%, and then find the dividend payers in there. Another thing that we provide is, again, those sector outlooks. So when you're thinking about dividend paying stocks and you're targeting them in particular sectors, you may want to take a look at those outlooks and get a feel for what we have to say about how those groups are expected to perform over the next 6 or 12 months.
Great stuff, Adam. Thank you very much for being with us today and helping us out with this conversation about dividend kings and building an income stream, basically, using the resources that we've got available on schwab.com on the Thinkorswim desktop software platform. And I would encourage everybody not only to fill out that feedback survey, but also check out all of the conversations and market commentary that Adam provides over there at Schwab Center for Financial Research. Adam Lynch, our Director of Equity Research over there. Thanks for joining us once again. Coming up next, we've got simple strategies for managing market risk. And that's going to be Brent Moores and let's see who else is with them, and Nate Peterson. So again, thanks, Adam, and we will see everyone else in our next segment for National Investor Day.